Ruto plans 2 sovereign funds to unlock 5 trillion shillings in infrastructure projects. President William Ruto has announced a bold financing plan to deliver 5 trillion shillings worth of national development projects over the next decade, using 2 sovereign funds rather than relying on traditional debt or higher taxes. What are the 2 funds? Sovereign Wealth Fund, SWF. This fund will draw from revenues generated by Kenya's natural resources, such as mining and petroleum. It will have 3 components: a stabilization unit to cushion against economic shocks, an infrastructure investment arm, and a savings arm to preserve wealth for future generations. National Infrastructure Fund, NIF. Capital for this fund will come from the sale of state-owned enterprises, private-public partnerships, PPP, and other domestic sources. The NIF is designed to pool resources for long-term infrastructure investments without increasing Kenya's debt burden. How the money will be used. Ruto laid out a detailed infrastructure program covering key sectors: transport, energy, agriculture, and education. Among the planned investments: transport, hundreds of dams, massive road dueling, and the extension of the Standard Gauge Railway, SGR, from Naivasha to Malaba. Water and irrigation. The government aims to build 50 megadams and more than 200 medium and small dams, adding 2.5 million acres under irrigation. Major dam sites include High Grand Falls, Arar, Soinkuru, and Narrow Sura. Energy. An additional 10,000 megawatts of generation capacity is targeted within 7 years, leveraging renewable sources and hydropower. Education and research. The plan includes strengthening Kenya's national research capacity. The government proposes to increase funding for research from the current 0.8% of GDP to 2% over the next 10 years, building the research fund to 1 trillion shillings through a mix of public, private, and venture capital. Why the funds are important. Reducing debt reliance. By using these funds, the government hopes to move away from financing large-scale projects through borrowing or raising taxes. Long-term sustainability. The SWF is structured to act as a future generations fund, storing wealth for future use, while also supporting current development. Private sector leverage. The NIF is expected to attract more private investment through PPPs and sale of state assets, amplifying public funds. Risks and challenges. Project execution. Large infrastructure and dam projects have historically faced delays and legal hurdles. For example, previous dam projects like Arar and High Grand Falls have had compliance issues. Fund management. Effectively managing a sovereign wealth fund and a large infrastructure fund requires strong governance frameworks to avoid misuse of proceeds or misallocation. Revenue volatility. Since part of the SWF depends on resource revenues, fluctuations in global commodity prices could affect contributions. Significance for Kenya's future. Ruto's proposal marks a shift in how Kenya wants to fund its development trajectory. Rather than relying on debt from external lenders, the 2 funds aim to create self-sustaining financial mechanisms that channel domestic resources into transformative national infrastructure. If properly managed, this could lay a stable foundation for growth across transport, energy, agriculture, and education, helping to deliver on long-term national development goals.